I'm going to show you all this video. This will help explain kind of what's going on, and you may watch this and still not understand exactly what they're saying. But so I started. What got me working with money? One of the things that got me working with money is I started collecting coins when I was in the 6th grade, and I was at show and tell. Well, we were in a social studies class in 6th grade, and one of the kids in the class was showing he had some old coins. And after class, we were in Mr. Parker's social studies class. And Mr. Parker, if you were talking or whatever, like he would throw staplers, erasers, whatever was on his desk, he'd throw it at you and he'd put it. Okay.
But Mr. Parker,
Mrs. Parker.
That's where he learned it from.
Mrs. Parker was my 7th grade math teacher, but Mr. Parker was my 6th grade social studies teacher. And so anyway, I was in Mr. Parker's class. This kid, I don't even remember who it was. After class, I followed him out of class, and he walked in the boys' bathroom, and I followed in there. And I said, "Hey, how much do you want to sell those coins for?" And because they're really interesting to me, so I bought them for $2. All his coins for $2, and I didn't know, I didn't know anything. And well, he did the deed. And so one of the coins I actually bought is still today one of my favorite coins of all the coins I have. It was a 1938 D, completely uncirculated buffalo head nickel. It's never been touched by human. It hasn't been touched by human hands since 1938. And that by itself was worth $75. And so there were a number of the coins. So it was probably worth at the time. I probably was worth my $2 was probably worth $200. For a kid out of in Texas, Middle Texas, or Texas, that was good. But I didn't buy them because I was trying to make money. I was buying them because they were shiny. And so anyway, I kind of got interested in coins then, and so I started collecting coins and going to flea markets. I remember buying some silver dollars, brand new silver dollars from a farmer in Weatherford, Texas, for $6 a piece. They were worth way more than that. So I bought a bunch of coins over the years, but I've never sold one. I have every coin I've ever bought to this day. Now, I'm getting closer. Well, over the years, I have bought what's called junk silver. Okay, so I have a lot of. There are some coins, silver coins that they made tons of, and will never be worth anything more than what silver content is. Little Washington quarter. You might have some silver Washington quarters. The Kennedy halves, the 1964 Kennedy halves. They take some of those. They're not worth any more than the silver itself. And you got to know that every silver coin is 90% silver. So if you have a silver dollar, 0.78% of that is silver. So if silver is $100 an ounce, that silver is worth $78. That's how you know. And so anyway, the bottom line is silver has made a big run. Okay, so my very first job, I worked at Western Auto. I was 15, and this was in 1979. And my boss, Larry Kelly, he was, the Hunt brothers in Texas were trying to corner the silver market. It goes into this a little bit from this video here. They tried to corner the silver market, but the big, now I didn't know this until this video, that the big banks didn't like them. And they decided they wanted to bankrupt the Hunt brothers. And that's exactly what happened. So if big society doesn't like something, they figure out how to beat you out of it. So, but this case is not the banks. The banks are probably the ones going to take a bath on this. China is going to make all the money on this. But in this case, China is our friend, the retail silver selling. because they're going to force the price up. And so he's going to go through what's been going on recently with silver. I don't know if y'all follow what's going on with silver. But silver a couple weeks ago was $119 an ounce. Okay, it then probably plummeted from 119 to about 80 in one day. And it's been hovering around $80 an ounce now for a couple weeks. A year ago, I started putting my clients in gold funds because I saw that there's going to be some movement for gold and silver. Anyway, people will buy gold and silver because it's considered to be a safe haven.
Right.
Okay, if the dollar loses value, gold and silver do well.
Mm-hmm.
Okay, so if that attracts people to the silver gold market too. So there's some other things in this I didn't know. That China controls 70% of the world's silver. You know that?
I did not know that.
So anyway, let's watch this video and then we'll talk a little bit more about it. Why is this important? I made my clients over 100% last year on gold funds. And they're already up a lot this year and probably will go up a lot this year. And so it's not a bad idea to I have my clients about 10% of the money sitting in gold funds. It's not a bad idea to have.
Currently, that's taking 9-day nap. Giving the banks, OMEX, and everyone else who wants to crush silver a massive opening. And in my 24 years of financial markets, I've never seen anything like this. This is a crazy East versus West battle for the price of silver, and we, retail, we're just watching from the sidelines. In 1980 and 2011, when silver pumped, it was us versus the banks. And today we've somehow ended up on the side of China in this battle, in the weirdest enemy of my enemy is my friend scenario in the history of retail markets. But I'll take it. China, if you want to pump silver, we could be mates temporarily. So if you're a silver holder, or even if you just hate the banks, you need to understand exactly what's happening right now. My name is Nick. I've been a professional investor and I'm a professional trader for 24 years, and I've never seen anything like what we're seeing right now in the precious metal markets. Today we need to talk about the silver war, the crazy story that's unfolded over the last 2 days, why China is all but banning shorts, while the US players are all but banning buying of silver, and the one move that they can make next week that while China naps that can cause a lot of problems for the market. Let's figure this out together. But before I start, I'm not a financial advisor. This is not an inducement to buy or sell any asset. And as always, do not take financial advice from some random dude on YouTube. Now, where do we start this story? We'll start the story by setting the scene, right? Because it's China versus the banks. Now, it's easy to look at it and say China is the world's second biggest superpower. So the US banks are cooked. They're done for. But I wouldn't count the banks out yet. I've heard many people on YouTube talk about the Hunt brothers in the 1980s and how they pumped the price of silver. But I want to tell you this story in full, the way no one ever does, to show you just how far the banks can actually go to crush silver. In the 1980s, the Hunt brothers bought a gigantic chunk of the world's tradable silver, and they did it using tons of leverage, borrowed money. Why? The same reason many of you are buying silver, for protection against debasement. That's how it started anyway. Eventually they just decided that they wanted to control half of the world's silver, like billionaire shit. Anyway, as the price ripped towards $50 an ounce, the exchanges and regulators, bullion banks, dealers, and COMEX, the COMEX directors who were short, they all started to panic. And that's the incentive, right? COMEX directors, they're basically the guys who own the casino. So on January 7th, 1980, the COMEX guys, they changed the rules mid-game. They brought in something called Silver Rule Number 7. And it's an amazing rule. If you're a sole loser and you own the casino, you can just put...
Yeah, you know what COMEX is? Okay. Commodity Exchange. CME, Chicago Mercantile Exchange. So you ever seen the movie Trading Places? Yeah, that's where you got a little class on trading commodities. Mm-hmm. It's funny that movie did that. So that's commodity exchanges we're talking about is what COMEX is.
Put the table when it's not going your way. In plain English, it said, no more loading up on silver with borrowed money. If you wanted to buy more silver, you now have to put up almost all the cash yourself. Basically, they stopped leverage longs. Now, you might say, great, because leverage sucks. And I would agree with you. I hate leverage. I think it's very, very dangerous. But the crafty little bastards,
If you don't know what leverage longs are, does everybody know what that is?
No.
Okay, it's when you borrow money to buy more of something,
Mhm.
so you can buy more of it with using debt. So instead of buying an ounce of silver with $100, you can buy 5 ounces of silver with $100. You control $500 worth of silver with $100. What's the benefit of that? Well, while it's going up, you're making 5 times the money. What's the bad part of that? Decide to go the other direction, then you're going to lose 5 times more money than you thought you.
The margin call.
And then you get what's called a margin call, and then you're forced to sell the silver you already own just to cover the call. Yeah, that was in trading places too. That's what happened on the second one.
Right.
We should just show the movie. Trading places.
Oh, we stopped very pretty long. They didn't stop very pretty short. So what happens? Well, you can guess what happens. That one rule choked off the rocket fuel that was driving the entire silver market up. Price crashed. The Hunt brothers were ruined, and for good measure, they sued them afterwards too. And the banks were saved. Of course they were. So COMEX has a proud 45-year history of tweaking the dial to make things go their way. And on Sunday, the Chinese New Year starts. China goes dark for 9 days. This gives COMEX and the US banks and the other alleged bandits free rein for those 9 days. What are they going to do with it? Well, we'll get there, but first we need to talk about who they are fighting. China. So China now controls 70% of the world's supply of silver. You know that. You've heard this line a million times by now because everyone says it on YouTube when they're talking about silver. And what do you do? What do you want if you control a lot of silver? I mean, literally, what do you want if you control a lot of silver? If you have all that silver, you want this price, but you want price to go up, right? It's not a trick question. And China is in the same position as you. They want silver to pump because they own a lot of silver. But on the other side of that trade are COMEX and JP Morgan, allegedly, and other banks. They are massively short on silver, and they get trapped, allegedly. And they are getting desperate because if silver doesn't crash, they will lose a lot of money. Allegedly. I'm sorry. I pay my lawyer like 650 quid an hour to tell me to say allegedly at the end of every sentence. And then the first 10 minutes of every call, he starts talking about the markets. So I'm basically paying him to give him stock tips. I'm looking at a lawyer. Anyway, you might throw with a tangent. Now you might say, my lawyer watches these videos. You might say, Nick, those fine upstanding chaps over at JP Morgan, they're a regulated entity. They would never use their influence to crash prices. I mean, people have actually said that to me in the comments. Well, just 6 years ago, JP Morgan did have to pay almost $1 billion in fines for manipulating precious metal markets. So, there is that. And I don't even have to say allegedly at the end of that sentence because that's just recorded history. So COMEX and JP Morgan have influence over the paper price of silver in the US. Now, I'm going to warn you, watch a lot of silver content on YouTube. I'm going to talk about a few things you might have heard already, but I'm going to talk about them from different angles. And I need to talk about this to set up the next part of the story, but I'll be fast. I'll talk fast. So January 1st, 2020, the silver exports. Now, on paper, licensing framework sounds boring, and I mean, to be fair, it is kind of boring. But there's a reason that you should care, because before this framework, silver flowed out of China relatively freely. If Apple needed silver for iPhones, they got it. If Tesla needed it for electric vehicles, they got it. If COMEX needed silver to suppress the price allegedly, they got it. But under the new rules, only 44 companies in the entire country, the entirety of China, were allowed to export silver. Why does this matter? Because China doesn't just mine silver. They are the world's refinery of silver. They control between 60 and 70% of the global refined supply of silver. They are the gatekeepers, essentially. They import the raw silver from Mexico, Peru, and they refine it into the shiny bars that we all know and love, and they own silver. And as of January 1st, they said, I think we'll be keeping all of that silver. We're not going to send it out anymore. They are draining silver from the West. They are draining silver from COMEX. And they want price to go higher. The fight is on. But China is about to take a 9-day nap while COMEX and Brent, well, they're gloved up and ready to brawl. Okay, so now the true fighters, the true fighters and their incentives. So let's break down the crazy story that's been unfolding over the last few days. Because China isn't just going to take a nap without putting some protection in place, right? In an unprecedented move, China cut hedging without quotas to zero on the Shanghai Futures Exchange. So, Chevy, what the hell does that mean? It is simpler than it sounds, right? If you do not have a special pass, you can't hold short or long hedge positions into the moment contract. So that doesn't sound simple. I'll make it even simpler. Sorry. no playing in the casino unless we say so. That's what China said. Basically, if you want to play in the casino, you need a special pass. We control the special pass. And who gets those passes? Well, sure as hell isn't JP Morgan or any American banks that are short on silver and desperate to crash prices. But why? Well, last week, 9 mysterious shorters were caught manipulating the prices of silver on the Sheffield, on the Shanghai Exchange. I did a whole video about this. And some allege that they were Chinese traders backed by a certain US bank, allegedly. So China caught foreign banks shorting on their turf and put a stop to it. They are essentially doing what retail traders in America have been begging the CFTC to do for decades. They are stopping the paper movement. It's wild. If you think about it, the Communist Party of China is acting more like a free market regulator than the CFTC. But look, this is really all about incentives. If you strip away the good guy, bad guy crap, every party is just doing what's best for them. And that's how markets function. China is long on physical metal and the US banks are short on paper. So China has an incentive to let price run up. But for the next 9 days, China is vulnerable because their exchanges are closed due to Chinese New Year. So they are putting these rules in place now so that foreign shorters start winding down the positions on these Chinese exchanges. So now instead of China taking a nap on the mat and being fully exposed, they've kind of built a cage around themselves. But the cage is not as secure as silver holders would like. Now, I know all of this shit very confusing. Why are there two markets, Sheffield and COMEX? There's more, but why are there two main markets? Why is the price of silver on the Sheffield $20 higher than the price of silver on COMEX? Well, since the advent of the internet and interconnected markets, the price of commodities has always been pretty similar across countries. There's always a tiny little bit of difference, but it's largely the same. But now, there's one price in China and a different price in the US, and the US price is somewhat anchored to the Chinese price, and vice versa. The Chinese price is anchored to the US price. Yeah, they can spread apart, but only so much. I was thinking about this the other day while I was playing tug with my dog, and I took a video of it. So in this example, he's COMEX, except he's not equal, and my arm is China, except I'm not equal. So we're pulling each other in our own direction, but we can only get so far apart, which is why US players are trying to short on Chinese exchanges. They're trying to push the Chinese exchanges down. And probably why Chinese players are trying to go long on US exchanges, right? But starting on Sunday, the Chinese exchanges, they turn off. And then COMEX gets free rein to short the shit out of paper silver without the Sheffield market in China as its anchor. It's the ideal time to strike. And this shows the just sheer absurdity of paper market. We got silver.
Do you know what shorting means?
Yeah.
Shorting is when you're betting the price is going to go down. And so what he's talking about is during Chinese New Year. Chinese New Year in China is like the Christmas holidays in the United States. Nothing happens. The week between Christmas and New Year's, nothing happens, right? So the Chinese New Year is going on right now. So nothing's going to happen for 9 days. Okay, so that's what he's talking about. So you're going to see, if he's saying what's going to happen is see J.P. Morgan Chase and all these banks are holding huge shorting silver positions. They're trying to force the price of silver lower, a lot lower. That's what they're going to try to do. So you might see silver go way down, about $50 an ounce, $60 an ounce. But what's going to happen is at the end of the Chinese New Year, when China opens back up again, they're going to be, if banks aren't smart, they're going to unwind their short positions, because if they're too short and China kicks in and they control 70% of the world's gold, they're going to force silver prices way back up, which is going to sink the banks.
I have a question about the silver and gold issue. Are they tied together in terms of what when this is happening with silver, what happens to gold, if anything?
Normally the exchange, the difference in price between silver and gold historically is around 50 to 1. So when gold is at, which right now is out of whack. Right now gold is at $5,000 an ounce, which means silver should be at $100 an ounce, but it's trading at $80 an ounce. So silver is being forced lower than it really should be at right now. Silver is at much lower price than it should be. It should be trading at least $100 an ounce. And so, yeah, it's 50 to 1.
I'm wondering about gold because they took out my gold the other day, and so I got real gold, white gold.
Oh, so they give it back to you.
He was buying a house, and he needed the cash.
markdown. It's distorted price. And I always quote Charlie Munger in most of my videos. Show me the incentive and I will show you the outcome. Well, COMEX has a big incentive to crush the price of silver. Look at this chart. This is the COMEX registered silver inventory. Registered means the silver that is actually available for delivery on those futures contracts. It's the silver that has a for sale sign on it, essentially. Depending on whose data you trust, we're looking at around 100 million ounces that they have in their golds ready for delivery right now. That sounds like a lot, 100 million ounces, I know, but here's the thing. The open interest, the amount of paper contracts that people have is 400 million ounces. So there's they've sold 4 times as much silver as they actually have. Oh man, this is so crazy. A futures contract is essentially a promise to buy an asset in the future, right? So there are 100 million ounces in the COMEX vault, but they've sold 400 million ounces worth of promises. It's like me selling my car to 4 people and saying, I'll deliver it next week, mate. It's so stupid. How do they get out of this tricky situation? Well, there's a few ways. I'll start with the ones that aren't insidious. First, registered silver is just silver that's ready to be delivered to buyers, right? They have registered silver in their vaults. But COMEX also has eligible silver sitting in their vaults that isn't registered yet. If they need to, some of that silver can be switched over to the registered pile to cover the shortfall. They just need the owner of that silver to put a for sale sign on it, so to speak. Also, futures contracts can be rolled over. Not everyone holding a contract actually wants a truck of silver at their door come the end of the month. Maybe they simply want to roll it to next month and then roll it again and roll it again and roll it again.
Contracts are 30-day contracts.
January showed us something really interesting. Now, normally January is a quiet month for silver delivery, but this January, almost 50 million ounces, I think that was the number, were delivered, which is like 7 times the normal amount for January. So people want metal. COMEX doesn't have enough metal. They sold too much. And one way to get people to roll over those contracts or to panic sell those contracts so they owe them less metal is to crush the price of silver, which they've been allegedly trying to do by raising margin requirements, right? Show me the incentive and I will show you the outcome. Remember Charlie Munger. So let's bring this all together. February 27th, 2026, that's the date you need to circle on your calendar. That is the first notice date for March contracts. That's when we get an idea of how many of those 400 million ounces contract holders actually want from COMEX. If people holding those contracts stand up and say, I don't want cash, I want my metal, mate, the COMEX could break. If they can cover the shortfall, though, or if enough of those contracts roll over, maybe they get through February and March. But the trajectory we're on right now, eventually those vaults are going to run dry. So unless COMEX uses the 9-day window to exert their will over the market and crush price, and I haven't even mentioned JP Morgan in a while, they are short on silver and they're trapped, so they also want to crush price allegedly. Will they though? Will these two players crush price? We're looking at the evidence. The alleged criminal bankers, they're sweating, right? They are draining the eligible vaults. They are leasing silver at 8% interest, which who pays 8% interest on shiny rocks? Someone who's desperate. Someone who is short and can't find the metal to cover it. But for us, the good news is they are probably fighting the scariest adversaries they've ever fought in China. The banks can bully the Hunt brothers like they did in the 80s. They can bully retail like they did in 2011. But they can't easily bully Beijing. China is a sovereign nation with nuclear weapons in a $19 trillion economy and national control over the supply chain. Now, I need to be clear here. I'm not a China fanboy. I don't actually like any government personally. I think government is the enemy of the people. And China doesn't care about us. They aren't doing this to help, silver stackers in Michigan or in London or wherever. They don't care about your freedom. They don't care about freedom in general. Or your sound money pieces. They're doing it because they have a big pile of silver and they want prices to pump. They are installing 160 gigawatts of solar this year that consumes millions of ounces of silver. They are building millions of EVs and undercutting US EV producers.
So did you get that? Mm-hmm. They use huge amounts of silver for solar panels and EVs. Well, the solar panels, they'll still be sold worldwide at a dramatic rate.
The pump. And I'm holding. I'm happy to go along for the ride. And if JP Morgan gets back in the process, well, that warms my heart because I really like that. For the first time in history, the interests of retail silver investors align perfectly with the strategic interests of a superpower that is actively hostile to the US banking system. So where does that leave us, guys? On Sunday, China goes dark. They put some protections in place, but COMEX and JP Morgan have played this game before. They have the biggest opening of the year right now. and they aren't the kind to miss an opportunity. Will they be successful? Does China have a few aces up its sleeve? Well, we're going to have to wait till next week to see. What do you think? Comment below.
So what was their thinking with the way the economy's been going at markets and stuff over the last year? Why would they short? Why would they go ahead and do shorts? Or have these shorts been on the books for 10 years, 5 years?
You talking about why would banks do that?
Yeah.
Because
I know they want the price to go down, but what was their thinking to say?
they're making huge amounts of money.
I
Because
understand.
China's trying to force, China's buying up the silver as much as they can, which forces the price of silver up. So what CME, Chicago Mercantile Exchange, or COMEX, and JP Morgan, all these big banks, they don't want to see the price of silver go up because that makes the cost of making solar panels in the United States and EVs and other things that silver is used for, data centers, to be way more expensive. So they're trying to force the price back down.
Right. But
But the demand for it, see, that's one of the reasons I started putting clients in Golden School last year, is the document center that the center's being built, the data centers being built all over the country. I knew they were going to use lots of copper and silver. And so that's why I started putting my clients in.
right. So why would these banks, knowing that, also short silver?
Yeah, again, it was to make the price go down. Because they're lending money. JP Morgan has already lent, I can't remember how many hundreds of millions of dollars, maybe trillions of dollars, or close to trillions of dollars, to companies to build these data centers. And they stand to lose a lot of money if these data centers don't make money.
What part of EVs use silver?
Batteries, electronic equipment.
Yeah, anything like it's a good conductor.
Oh,
Gold is a good conductor.
that is. My brother-in-law's is South Jersey Electric Vehicles. They have
Yeah.
locations, and they just acquired a third one, and so
Yeah.
it's
So
for them. So
that's why if you have a car for sale and you leave it by the road, people will try to take the catalytic converter out because it's got rhodium in it.
Yeah.
And rhodium's worth more than it's worth quite a bit. So it's a precious metal as well. And so the demand for precious metal and the fact that the dollar has been weaker lately has forced the price of silver to go up. So there's a lot of little things causing it to go up, and I think will cause it to continue to go up. I think we can see silver go as high as $170 an ounce. And so, and I have lots of clients. I have a number of clients that have a lot of silver. It's a good place to put part of your clients' money. Yeah, where I'm not putting my clients in physical silver or gold. I'm putting them in the fund we're using is OPGSX, which is the Invesco. What's the name of the fund?
Precious metals.
Precious metal fund. And what it is companies like Newmont Mining and all these other companies. They pull copper, gold, and silver out of the ground. Well, for the last several years, they've traded at a discount. Most stocks are trading at 18 times forward earnings. Most of these miners are trading like 8 times forward earnings. So they're trading way lower than they should be. Matter of fact, I was concerned that when silver went from 119 back to 80, that we would take a major hit on the OPGSX. It barely went down. And just keep going up. So, because the miners, they're still making money, they're making huge amounts of money at silver at 80. And because they hadn't seen it that way. It was, silver for the last several years has traded around 25 or 30. And so it's a good opportunity if it's part of the everyone's talking about AI, right? This is part of the AI trade. And so that's why I'm putting it. And the other thing I'm putting my clients in, they've done well this year, is the oil funds or energy funds. IENAX. It's up 20% this year. We're only in February. So, and the market's widening out. If you notice, the tech stocks are not doing well.
VAFAX.
down for the year.
Yeah, but ACSTX, Large Comstock,
Yeah.
is doing great. Why? Because they don't have much of that. They own healthcare, and they own energy companies, and they own banks, which are all making money.
Mm-hmm.
So
The small stuff's good too. VSC.
yeah. But VSCX, is it closed?
Is it closed?
It was closed for a long time.
I thought that was BDOA.
No, that one wasn't closed.
It's open.
That one was the one that was open.
Well, too.
Same people that manage both of those funds.
Yeah.
But VDOAX is mid cap
Yeah.
value, and VSCAX is small cap value.
Yeah. VSCX up 15 for the year, 15 and a half.
And what's VDOAX?
I'll take a look. I haven't looked at it in a long time. It's performing better than the.
OEGAX is doing well. This is a big cap growth.
That's why you
Yeah,
have,
10.85 on VDOAX.
Yeah.
that's why you have a balanced portfolio. You have some large cap, you have some mid cap.
Yeah.
you have some-
Well, but the last 2 years, you didn't make any money in anything other than Magnificent Seven. And small caps didn't make money, and mid caps didn't make any money. It's only this year. Well, towards the end of last year, October, I started noticing that the tech stocks weren't doing well, but everything else was. So I started moving all my clients over into more balanced business.
But if you had small cap over the last couple of years, you were putting in 50 or 100 or 200 into that account.
Yeah.
It's down. Now it's going up, and now you're
Well, I'm talking large chunks.
Yeah. Well, I'm just using that example because 90% of the people can't do a large chunk.
Yeah.
We're little people.
Well, I'm talking
Maybe
about
$200
me, I'm talking about funds. So the bottom line is things are going. Everything's going to make money this year. Bonds are doing well right now. I don't know if you noticed that. Yeah, I got ACTHX high yield. I have nearly no money in the floating rate. I've gotten rid of $40 million of floating rate as fast as I can, because interest rates going to go the other way.
How much do you move at a time when you come up with the floating rate? 10% maybe?
All of it.
All at one time?
Yes.
Really?
Yes. And I'll tell you another one that's making money, that's up 15% for the year, is the convertible securities fund, CNSAX.
Okay.
So I'm working on a case right now. I have a client that was a client of mine back in the 90s. I met her when she lived in Marietta. Her and her husband, Judy and John. Judy and John lived in East Cobb, and I never liked doing business in East Cobb. I used to call them the East Cobb snobs because they're hard to deal with. They're educated and they thought they knew more than everybody else. So it's hard to do business with people like that. But they turned out to be good clients. And so they lived in East Cobb for a long time, and then they left East Cobb and moved out to Hilton, probably 20 years ago. And so they're still, and they were not these kind of small clients. They didn't have a lot of money ever. They might have had less than 100,000. They live in the Sun City Hilton community. A couple months ago, I got a call from Judy, and she said, my neighbor works for one of the big banks, SunTrust. No, Wells Fargo. She's worked for them for 30 years. And she cannot wait to retire. And she has money in her retirement account. She needs you to come see her. She did a in-service rollover for about $600,000, a little over $600,000. And I always tell them, I say, if you put more than $1 million in the investment funds, then you won't pay a sales charge. So he had about $400,000 sitting in CDs. So he gave me his $400,000. She gave me $600,000. So I put him over $1 million. So they didn't pay a sales charge. They've made money, and so they've been happy. This all happened like I started doing business with them like around October. So they've been happy with it, and well, it turned out I knew he currently is over all the maintenance for the whole Sun City facility. The husband is. Well, he's good friends with Judy because she sits on the HOA. She's the president of the HOA for all of Sun City. So he calls me about a month ago says, our HOA has a lot of money sitting in cash, in CDs. So I went to visit them. They have $3.5 million
Oh my God. And CDs?
in CDs.
Oh God.
That's how much the HOA has. So I said, I was asking, and there I was sitting in a meeting with him. I said, how is it y'all ended up with that much money in this HOA? He said, well, when I became the head of the maintenance, I started really negotiating. If we need a new roof or something, he really shops things and gets the best price, where other guys in the past didn't do that. They just paid whatever somebody offered them. So that's how they got more and more money in the HOA. So now to the point where they're going to start paying some of the money back to the residents. So I said, well, so you're only making like really low rates of return on these CDs? And he said, yeah. And they said, we'd like to make more. I said, well, so that's what I'm working on now, is I'm going to go back in a week or so. They're going to start off with $1 million. I'm going to take part of the money, and I'm going to put, what I'm going to do is the bulk of it is I'm going to put in very conservative investments, because it's coming from CDs, right? And then what I'm going to do is let the dividend that some of these conservative funds do pay monthly by more aggressive investments. So that way, most of the money is sitting in something that can't really go down in value, but the interest it's earning is going to be buying something that can go down in value. Okay, so go to new scenario.
So this might be the portfolio to put somebody who's like
start
they're pulling R&Ds.
Yep.
And
Or someone that has money sitting in, someone that does have money in CDs, that doesn't want to leave the bank, wants to keep it safe, this might be the way to go. So the first one, the ticker symbol is LMTAX. Lima Mike Tango Alpha X-Ray. This first fund here is the Invesco short duration, let's look at what this means. Invesco short duration inflation protected fund. Okay, what does short duration mean?
short period of time, 6 months to a year.
Well, why would you go with a short duration bond fund over a long duration bond fund? What's the difference?
If
Less volatility.
Yeah.
It's less, shorter. The shorter, the less volatility it is. Less risk there is, right? So that's why I'm starting off with a short. Okay, so the next fund we're going to use, we might use, is the CNSAX, which is Charlie November Sierra Alpha X-Ray. And then the third one is Alpha Lima Alpha X-Ray. You know how equity and income has 60% stocks, 40% bonds?
Yeah.
This one has 40% stocks, 60% bonds. Yeah, it's called the Income Allocation Fund. Mm-hmm. We're going to put $500,000 in the short duration protected. Okay. And we're going to put $250,000 in the other two. Now, if the client wants to be less aggressive, all I have to do is put a higher percentage of the money in the short duration. Right? It might be the client say, that's too aggressive. So I might end up putting $800,000 in the short duration and $100,000 in the other two. Right? This is the one I want to do. I just went back actually 1 year. So I'm like, yeah, 1 year. Because why am I only showing 1 year?
Short period.
No, because bonds sucked a year ago. Okay, so prior to a year ago. Okay, so bonds remember that's why I had my clients in floating rate funds. Bonds were terrible.
What, for at least 5 years?
Yeah, for a long time. Well, the whole time. Well, since 2018.
Yeah.
When the Fed chair decided to lower interest rates. Raise interest rates. Yeah, raise interest rates. So that's why I started putting everybody in floating rate funds. Actually, it's 2022. And so bonds were terrible. You were gonna lose money in your bonds, but things have changed. Now things are going the other direction. So now we got to go the other direction, right? So I can't go back more than a year, because if I do, it's going to look terrible. Okay, report options and investment detail. That's what we want. Okay, so generate report. Okay, you can see that in 1 year it made 10.34%. Okay, so that's not bad for. That'll be a CD, right? Mm-hmm. So let's go down to, let's look at that short duration page first, and then we'll come back. What kind of investments
That's true.
Okay, it's not, it's very high percentage treasury, right?
Mm-hmm.
So most clients realize or believe that treasurers are pretty safe, right? They're probably safer than banks for sure, right?
Yeah, considering the banks have to buy them.
Yeah, the bank has to buy the treasury to even issue. Yeah. So, but you can see the 12-month yield is 4.11%, and actually that's 12-month yield. It's actually doing a little bit better than that. It pays a monthly dividend. So we would I'd have the dividends paid out every month by the other two funds. They can feel comfortable putting a higher percentage of their money in here, right? But so mine should be I want to make a lot of money so that they get excited and give me even more money. And I might go in that direction, go to equity and income. I'd like to go to equity stuff.
Yeah.
But we got to take baby steps. Alpha, Lima, Alpha, Alpha, X-ray. This will work. So we can see this is a convertible bond fund. So do you know what a convertible bond is? You know what a convertible is? The top goes back to the car. That's convertible. Okay, just like this. No. But what a convertible bond is when Home Depot first got started, they didn't have the money to build all the stores they needed to build. So what they would do is they would issue convertible bonds, and the bond, it was a special bond, it would pay an interest rate, but at some point, you could convert the bond to a certain number of shares of stock. So when Home Depot stock started doing well, it was converting their bonds into stocks. Well, bonds to a company is debt. Stock to a company is equity. So they're getting rid of a lot of debt. So let's look at some of the look at some of the issuers of convertible bonds over here. We got Bank of America, Boeing, Uber, Southern Company, Coinbase, Apollo, Rivian, Snap. So there's a number of companies that are issuing convertible bonds. I know that Tesla is that too. So if we, and you can see in the last year, this fund only made about 5.4%, but already this year it's up over 15%. So go to the bottom, let's see the dividend pays. It only pays about a 2.17 dividend. Where you're going to get most of your money is from the growth front. Okay, so let's go to ACSTX, 4.18. So that's what I'm going to do with the money at first, because I got to take baby steps with them and see that they can make more money than they're making in their CDs, but not to go too aggressive.
Don't want to scare them off.
And then once they're making some money and they see they're making more money than they're making from CDs, then we'll probably move some of the money, like I was talking about, in the equity and income fund. But how do you end up getting money in an account like that? So go to where we pick out the different form, the SB form. What kind of institution is this? Is a for-profit organization? No, non-profit organization. So you're going to do an SBNP, SB 51 or FP, whatever it is.
Are you saying an HOA, the nonprofit?
Yeah, it's a nonprofit. It's like a church. America is very similar to the military in that everything has an acronym, and they use them willy-nilly, and no one ever explains what they are. Okay. When I first got started, they talked about a base shop, and no one knew what a base shop was. Some people thought it was a bait shop.
What it sounds like.
Yeah, a bait shop or a base shop. It's a base shop. A base shop is an RVP, which is what I'm a regional vice president. And all the agents that work below that RVP is known as a base shop. So this is the Hoffman base shop. Okay, right here. It says PSS non-qualified account application. Is that the right one?
Does it say 50?
SB 50 non-qualified. Is that right?
That's it.
No, it's not.
Yes, it is.
Okay, so then we got SB 50 BUS. Is that right?
That's the business.
No. Okay, what's this one right here? Non-profit organizations.
That's it.
That's it.
Okay. And what's the number on it?
It has to be 50.
But
But it has to have, what designates the difference is it has NPO. So you have to get a copy, you gotta get the tax ID number of the organization. I like to also get a copy of the, articles of the corporation. That comes back, says that they are, or from the IRS or something that comes back that says they are a not
Takes questions later.
you can't do it on POL, can you? Or
No. Yeah, whenever you do NPO, nonprofit, or and a lot of these, you have to do them on paper. So name of individual opening the account. So I guess that'd be and name. Okay, right here in the middle, name of legal entity, address of legal entity. Verify a control person. So the control person is going to be my client. Here we got to identify how many people can actually make changes to the account. So we're going to list each one of the board members, I guess. And then the authorization, the authorized person would be Judy. Go to the next page, look for the specific box. It says authorized individual, contact person, control person, or beneficial owner. Well, this board members are all going to be control persons. I run a account for a cemetery fund here now too, after years. Now that cemetery fund has more money, we could pay for everybody to be buried in that church. We still have money left over. Yeah. So name of the organization. Well, let me tell you how I get around that. It's supposed to be no more than $100,000 per trade, right?
Right.
I have sat there and did 20 $100,000 trades before. As long as you get it signed, you can always find a box that you missed and fill it in. And then I'd send it, and then I'd scan it and email it to, I would send it down to desk. Yeah, to do it for you. And then once they open the account, I'll instruct them to ACH $1 million in there. I like to communicate with my clients clearly about what's happening.
Yes.
So when do you think the money will be in the account? They'll say the money's in there now. So I said, then I'll contact my back office, tell them to take the $1 million. I always verify the last four numbers of the account number, just to make sure that nothing's changed. And then they'll do it, and then I'll contact the clients back and say they initiated the ACH purchase. Every time I've dealt with Delta employees, they get their bonuses every year. About 40% of it go to taxes. There might be a UPS.
Well,
They're going to get 150.
Yeah.
And I do know that this contract that the drivers negotiated a year ago is killing the company.
yeah.
It's killing it.
Yeah.
UPS is.
They get them.
I saw when I heard what the contract was, and looked at what effect it was going to have on financially the UPS. It's basically going to put them out of business unless they get. The Teamsters is not doing very well, and who's the union under that works with UPS drivers. FedEx is going to eat UPS's lunch if they're not careful.
Amazon.
And Amazon's.
Yeah.
You were talking a little while ago about bonds being good again. First time in a while. I also read a report the other day that said that international.
Yeah,
really
international.
picked up.
But again,
In fact, for the first time, it outperformed the U.S. market back in 2025 in the final quarter.
Right.
And there was an analysis of the S&P 700 international, and I can't remember. I don't remember now what it was, but it was a phenomenal annual return last year.
yeah, it did a little bit better than the U.S. market last year.
Even the same.
But I just
AIX used to be a dog for at least 8 or 9 years.
Which was 8%.
ACSTX, Asia Pacific.
Oh yeah.
Used to be this year. I mean,
What is it up this year?
8%.
Yeah.
I
So-
love that fund because in the next 10 or 20 years, I think my clients will be glad I put them in. Not this year, but
The land
So-
was 20%.
There's no European country that's doing well better than the U.S. And there are some Asian countries now. Japan is fixing to really take off. Japan's going to do well. Korea's going to do well. Taiwan's going to do well.
Have you seen North Korea's numbers?
No one else has.
North Korea had a growth year last year. And that Kim Jong-un was getting ready to hand off leadership. Y'all read that?
Mm-hmm.
To his teenage daughter.
Yeah.
Are you serious?
Yeah.
Has she got the same haircut?
I haven't seen a picture, but
He's got the same girlish figure.
So I'm talking about a typical portfolio.
I haven't
Large cap, mid cap.
I haven't put hardly any money international.
International.
and this did specify with emerging markets.
Yeah. Now, okay. So let's back up now. Emerging markets do well when commodity prices do well.
Mm-hmm.
So if oil and gas and gold and silver
Silver.
and tin and all these other things do well, those companies.
What does Invesco have for emerging markets? Do you know one off the top of your head, a ticker?
Yeah, they have emerging markets fund. Oh, GTDDX.
Or two yesterday.
What did it do?
15.36 for the year.
But look at IENAX. IARAX.
That real estate, 18. Energy's up 18.
Real
IARAX.
estate doing good?
Huh?
Real estate beginning to do good?
Yeah, it is. This is the year where you can really have a diversified portfolio. Everything that you can finally have.
Anything, make us look good.
Yeah.
Sure, man.
Equity and income was a dog for the last 2 or 3 years,
Mm-hmm.
and now it's good. So it's hard to pick a bad investment this year.
I'm about to say, we need that break because, man, the phone is ringing.
Mm-hmm.
My phone's been ringing because no one's gotten their 1099.
Yeah, I got a call.
Oh, yeah.
About that.
It's
I've got
IENAX. IENAX. That's the emerging markets.
Okay,
IEMA.
IENAX.
There's actually an EMIAX as well. That's an emerging markets innovators fund.
Because 88% of success is just showing up.
You come work with us. You're in business for yourself, but not by yourself. And we've got all kinds of people who will take your questions. And I tell all my clients, if you have a question, call me. I don't promise know the answer, but I know smart people.
So one of the basic things we teach, the very beginning things we teach to help people understand money and interest rates and things like that, is that they call the rule of 72. The rule of 72 does is to help, if you take the number 72, and let's say you have money in a CD that's paying 2% interest.
You know what a CD is?
Certificate of appreciation. CD is certificate of deposit.
Or issued by banks.
And banks issue them. And that's the way a lot of people like to save money, because banks will offer you a CD at a slightly higher rate than what you get in the savings account. So if you put $1,000 in a CD or a savings account or whatever, and they're going to pay you 2% interest on it, and you put $1,000 in there, you might think, well, I wonder how long it's going to take my $1,000 to turn into $2,000 if I'm making 2% interest. So how do you figure it out? You take the number 72, divide it by the interest rate you're earning, in this case 2. 72 divided by 2 equals 36. So what that means, if you have $1,000 in the bank and we're making 2% return, it'll take it 36 years to go from 1,000 to 2,000. So whatever age you are today, add 36 years to it, and that's how you would be when it would double. Like Rachel, she's 28. Okay, so she would be 64 years old.
Of course, you have 2,000.
But instead, mutual funds from 1924 to today, mutual funds have been around for a long time, have averaged about a 12% return. So if you take 12% divided by 72, what do you get? 72 divided by 12, you get what? Say 6.
Six.
So that means that your $1,000 would double every 6 years.
That's a lot better.
A lot better. But watch how different that is. So 36 years from would go from 1,000 to 2,000. Okay. But logically, you think, okay, 1,000 is 6 years, so it's going to, well, let's see, that means how long it's going to double. So 36 years from 1,000 to 2,000. So let's see how much you'd have $1,000 at 12%, what you would have over the 36-year period. Would go from 1,000 to 2,000, 4,000. That's one doubling, two doubling.
12 years.
Okay. Then to 8,000
2 years.
and 16,000. 32,000.
It's not a truck or whatever.
30.
And then 64,000. How many doublings?
Now with 36 years.
Okay, so in the period, your 1,000 went from 1,000 to 2,000 in the CDs. Your $1,000 would go to from 1,000 to 64,000 over the same period of time. Let's say you have a credit card. This is why the average person loses. Okay, so if you have a credit card and they're charging you 24% interest, right? 72 divided by 24 equals what? Say 3. 3. So that means if you go to Rooms to Go and you buy a $2,000 couch, they say no payments, no interest for 3 years. Okay, whatever. If you don't pay that thing off, you'll end up paying, what I said, $2,000 couch, you'll pay $4,000 for that couch. So that's why Rooms to Go get charged no interest, because they don't even have to make money on the couch.
Mm-hmm.
They could sell the couch at a loss and still double their money. Because they're going to hit you with the finance charge. Because they know that I use no payment, no interest, but they know that I always pay it off. But the majority of people do not.
Sure.
And they know the majority of people aren't going to do it. So they make all kinds of money from the interest they charge. So the reason most people don't win in America is they have their savings making 2%, right?
Mm-hmm.
But they're being charged 24% on their debt. So their money is doubling every 36 years in savings, but their debt is doubling every 3 years. If your debt is doubling every 3 years, and your money is doubling every 36 years, can you win? You cannot. So you got the rule of 72 will work for you or against you. And you got to make it work for you. And the most Americans don't know about mutual funds. They make it 12%. So, but they know about credit cards charging 24%, right? So why is it they don't know about mutual funds making 12%, even though they've been doing it for over 100 years? It's because no one has ever sat down with anybody and explained to them what it even is. So most people aren't taught anything about money. And we learn about money from our parents. And if your parents are poor, then you'll manage money like poor people. And so you got to learn how to manage your money like non-poor people, like wealthy people. And then if you can look, because knowledge is power. Well, knowledge is part of power. Just because you have the knowledge, you still don't win. You have to then apply the knowledge. Okay. I have a client down in that owns a transmission shop down in Naples, Florida. And he worked as a transmission repairman in this transmission shop for 20 years. And then when the guy that owned it decided he was going to retire, he sold it to my client about 2 years ago. So my client went from making $80,000 a year as a mechanic, right? Now he's making close to $1 million a year And so one of my clients, how I got him as a client, is one of my clients that used to live down there referred him to me because he said, I'm making all this money I need to make sure I handle it correctly. And so he's been investing, he invests $250,000 at a time with me, right? And he's not used to this. He's never invested ever in his life. Okay. Now yesterday he invested $250,000 with me. Yet, and he does about $250,000 every quarter. And so I was talking to him yesterday. I said, he said, how's the business? He said, it's doing great. Great. He said, yeah. But he's still not used to being a business owner. And so I told him, he said, I'm afraid to spend money. I bought my wife's car. Okay. He's got an accountant down there, he's a good accountant. He's got me as a financial advisor. And I said, the college's going to do extremely well. This would be the year that you need to buy a building. Because why is that? Why is this the year to buy a building?
That's right up.
You can write off 100% of the purchase this year. With one big beautiful bill. Do that. Okay, so before, like this building, I get to depreciate it over a period of 30 years. But now, if I bought this building today, I can depreciate the whole cost in 1 year. Or I can write it off all in 1 year. So, and I said, the economy's going to do good. And let me ask you, I said, if somebody comes into your shop and they need a new transmission or have it serviced, do they sometimes need tires? Why are you not offering tires? I said, what would it cost? What would it take for you to start offering tires? He said, it wouldn't be much. And he said, I'd have to get a little bit of machinery, and I'd have to pay some tech, $20 an hour to do that. And I said,
Inventory.
and a little bit of inventory. I said, why are you not doing that? How about oil changes? So he said, baby steps, Eric. Baby steps.
Yeah.
He says, I'm not used to being a business owner.
Yeah.
And I said, and I can hear the fear, and I'm not talking on the phone, but I can hear the fear over his voice, and that would be scary to him.
Oh.
To me, it's like money from heaven.
Picks one of those things. Just you're giving them ideas. That's all.
Yeah, I said that's why I said I'm feeding you ideas because if you pulled in and you had your transmission fixed, and it's off the ground and they're fixing it, they notice that you have 2 bald tires, or your tires are wearing out on the inside and you didn't notice that they're about cord was showing, okay. And the mechanic said, hey, if you want, we can replace those tires. You want me to go ahead and do that? Okay, why is this year a good year for that to happen? Because everybody's going to get between 25 and 35% bigger tax refund than they ever had before. So there's more cash in the system. So this year would be the year to be offering tires, because it's more likely the person's going to say, I have the money, I guess I'll go ahead and buy the tires. This is a good year to do that. Did y'all learn anything new today? Okay, so we won't have the next time we'll have class will be the second Saturday in March. So March 14th.
Okay.